Okay, this is the second lesson of chapter 3, Introduction to Intraday Setups and Trading. So this is going to be the chapter where we are really going to get to the crux of intraday trading, right? Now, just as a disclaimer, if you do not understand chapter 1 and 2, you are going to have little success in navigating the lower time frames and intraday because the bias for the intraday trader is the edge for the intraday trader. If you know where the higher time frame is reaching into, you are essentially just getting in an entry on the lower time frame within the day, within the times of day, which we will talk on, not in this lesson, in the next lesson or the one after, on getting in line with the higher time frame objective. Okay, now essentially what we want to trade is the expansion of the weekly range, right? So make a note of that. The expansion of the weekly range is what we are after to trade. We don't want to trade this part. We don't want to trade this, the high to the low. We don't want to trade that small move. We want to enjoy this move here, the expansion, right? Because here you can get in many times within this one weekly candle because we have to think about this. What is the weekly candle built up of? 5 daily candles builds up one weekly candle. Now, this, right, is the trading for last week. I'm on the replay mode and I cut out today's trading and Monday's trading so that we can just have this clean 1 week of trading. And this is a bullish week, right? So the market, it opened up here, right? So this is to scale, right? This weekly candle is drawn to scale, meaning that it's accurate with the high, the low body, right? So it opened here, right? The opening, we opened here and we traded down, right? Early on, this is the low of the week. Right here, this is the low of the week. So I'll put the wick here. And then what happens? We expand all the way up, right? This is the high of the week, labeled this. And then we come back down into the range and we close here. That is how the weekly candle was formed last trading week. Now, this is where the bias comes in. We had a bullish bias, right? If you see not the last weekly commentary, the second last one, we were bullish for this week. And this is where your high time frame comes in. This is why the higher time frame is so important because you wouldn't have been able to get in line and expect these up moves on the Tuesday and the Thursday if you were not aware of what the higher time frame was doing. Now, if you haven't seen the weekly commentary, which I'm assuming you're all watching the videos as they're in order, and the people that are new that wouldn't even be watching this video as I'm dropping it today, you would have been aware that I did say that I want to see the DXY trade down into the fair value gap, right? The the bullish fair value gap and balance the range at the equilibrium. So if the DXY done that, the Euro USD would be opposed to go higher against the DXY. So that's where we derived the bullish weekly candle, right? Because then we know that the likelihood of the next weekly candle is bullish. This is important because that weekly candle now we can start to, right, have an approach, an idea on what is the likelihood of the bullish candle forming, right? How is it going to form? This is the crux of the day traders, you know, theory on how the market is going to trade for the week. So on a bullish candle, what are you going to see? You're going to see the low be placed in fairly quickly and the high is going to be placed in later on in the week. So we see that the low was placed in on Monday and the high was placed in on the Thursday. Now, let's talk about where we can expect the low and the high to be made and the day. I don't want you to be focused on what day makes the low and the high. bear with me for a second. Let me explain that. As a day trader, you do not play this guessing game. This is one of the regrets I have. I used to play a guessing game, right? I used to have a good bias. I used to be able to call this weekly candle, knowing if it's going to go higher or lower. But then I used to fall a victim to where the low was going to be made. Because it can be on the Monday, the Tuesday, or it can be in the London of Wednesday. That is the likelihood of it happening. And there's a logic behind that. Let's explain the logic first before we go into where you can expect the candle's low of the week to be made on a bullish week. Essentially, let's say you had the role of creating a bullish week, right? And you have to place in a low, a high, and the close. The openers, of course, right? And you just need to make this week bullish. You need to make this week bullish. Does it make sense for the bullish candle to make the high and then the low and then close higher? Or does it make more logical sense for the bullish candle to quickly, early on in the week, place the low and then use the rest of the week to build this range and then close close to the high? Which one makes more sense? To me, the second option makes more sense. You quickly place in the low so that you have more time to build the expansion. Now, this is a fractal idea and it can work for all your time frames. However, as a day trader, we are only caring about the week, right? So, in saying that, this candle is then split into 5 trading days. Now, clearly, each trading day is not bullish. Otherwise, if it was all bullish, there will be no wicks and it will just be one bodied candle, a liquidity void. So, the day trader is opposed with a problem here. There are some down days within the week. Within the bullish week, there's some down days, and that's normal. That's there to throw us off. Now, where can we expect the low of the week to be made and the high of the week to be made on these weekly candles? With reference to chapter 2, the PDA matrix, the premium discount array matrix, right? On the Euro USD in this example, down here, right, we're at a discount. We were at a discount. We ran this external liquidity, right? We ran this external liquidity. So when we ran the external liquidity, we knew that we're going to trade back into the internal range. So a retracement was expected. A retracement where? Into the premium. Okay, so within this week, we know that we're in for a bullish week because we want to trade back into the premium. Now, the low of the week, we know that it's going to happen early on in the week because it makes more sense for the anatomy of the bullish candle to place in the low of the week quickly before creating the expansion for the rest of the week. So on this example, it placed it in Monday, right? On Monday in the New York session, it placed in the low of the week and it went higher. Now, it's not always Monday, and I'm going to give you guys a revision task. It's not always Monday. It is sometimes Tuesday. Rarely is Wednesday, right? Wednesday rarely makes the opposite end of the range. When I mean the opposite end of the range, this is what I mean. It's a bullish week. The opposite end of the range is the low. Now, within these days, I don't want you to guess which day is it going to make the low. This is where sound logic comes into play. On the Monday, if it's a range day, right, and Monday doesn't trade down lower and clear liquidity because this low, right, it takes out this low. If I move this, right, this low, if you take the low of here, it comes in that, it 3892, and this one is, oh no, is that, this one's higher a little bit. Regardless, we moved higher on the Monday and we traded down lower. Now, when we traded down lower, right, where are you trading into matters. The low of the week is always in a logical area, like so is the high of the week. Now, the low of the week is usually going to be in some sort of discount array, or it will be a run on a low to go higher. In saying that, this is where your knowledge of the PDA matrix comes into play, right? For example, this, right? What do we have here? We have order block and fair value gap. This is where I expected the low of the week to be made. And I said this in the weekly commentary. I want to see the price come down into here, and I wanted to trade off of that because that was the most logical area for the low of the week to be made for me. Now, Tuesday, Wednesday, and Thursday, I want you to look at what Monday done, what Friday done, and look at Thursday, Wednesday, and Tuesday. Those days, I make a note of this. The reasons and I've said this a lot of times, I don't trade Monday and I rarely trade Friday. The reason being is because the weekly expansion of this weekly candle, is usually composed of Tuesday, Wednesday, and Thursday's trading. And you can see it's evident here. Look at the move from Tuesday, right? If I go off here, right, and I just get look at this trend line. So essentially this, right, is the trading for Tuesday. From Tuesday to the high of the candle was 165 pips. That was the expansion from Tuesday to Thursday. And that is what we aim to capture as a day trader. We don't aim to capture the move back down into the range. We don't look to trade this high here to the close. Now, where is, you know, the high made for a bullish week usually? It is usually made on the Thursday. However, it can be made on the Friday as well. The most likely time it will be made on the Friday is when there is a high impact news event on the Friday. On the topic of news, right? There is news events every single week. This is why the forex market is volatile and it's the most traded market in the world. It's very, very volatile due to how sensitive currencies are to news events. Frame the high of the week and the low of the week. This is your narrative. This is where building your narrative comes into play. Use the news events. Use the news events. Let me give you an example. This week, right? If we look at the week, right, that we're trading in now. The week that we are trading in now, if you look at your charts, there is FOMC that is going to be released on the Wednesday, which is, today, right? And we've traded up into a premium. I'm going to give you an example of building a narrative for the high of the week and low of the week so that you guys have an example to go off of. This week, right, we have further traded up into a premium on the higher time frame. Key is the higher time frame. We have traded up close to the optimal trade entry on the euro, and we are filling in the fair value gap. We have moved higher on the Monday and the Tuesday, right? Very quickly, we have priced into the premium of the higher time frame array, the higher time frame price range. Now, the array within there is the fair value gap. Now, Wednesday, there is the FOMC event. Now, the market, right, is driven up higher into a premium prior to this FOMC event. And our narrative was that we want to see the trade happen into the price trade into the higher time frame premium for the euro before we start to look for short ideas to unfold again. And now we are inside of that premium and we are hunting short ideas to form again. The Tuesday, we are currently just floating underneath optimal trade entry for the euro. And FOMC is now at 7 p.m. the UK time, 2 p.m. US time. So Wednesday is likely to trade a little bit higher before the FOMC event as a Judas in London, filling in the optimal trade entry, create the high of the week on the Wednesday, and FOMC will be the driver, the excuse to then trade back down from the premium into the discount. Therefore, I expect Wednesday to have the high of the week. Now, there is also a news event on Friday, the core CPI. And what did I say before I start speaking about this narrative? I said if Friday has a news event, then that will make the range of the week. So there's FOMC. So we're assuming that FOMC is gonna, the day of FOMC is gonna make the high of the week, and FOMC will be the excuse to price the Euro USD lower. So the high of the week is likely to be made on the Wednesday. Then Thursday we drive down, and Friday we use the red folder core CPI to drive down even lower and make possibly the low of the week, or to trade even lower within this weekly range. Do you see how I piece it together with the news? If you're in a bullish week and there is a news event on the Tuesday and not a news event on the Monday, well, what do you expect? Do you expect the low to be made on the Monday or the Tuesday? Because think of it like this. Tuesday has more movement. Tuesday is going to be able to move more. It has a reason, an excuse to move more. The central bank have a greater reason to move it more due to the economic event that lies on Tuesday. So Monday, right, if Tuesday has the event, Monday, right, if Monday is trading, now stay with me here, because this is gonna might be the aha moment for some people. If you are bullish, right, you're in a bullish week, right, you're anticipating a bullish week, and Monday is trading within the range. It's just trading, 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 trading. And underneath Monday's trading, there might be you know, a bearish price array, a fair value gap on the 4 hour, might be a 4 hour order block, maybe a daily imbalance from last week Friday. But Monday is just consolidating. And Tuesday, remember Tuesday has that news event. So if Monday is trading just above a discount array, we can expect Tuesday to trade below Monday into the discount array, make the low of the week within the discount array with the aid of the news event, and then trade higher. That's a classic Tuesday low of the week on a bullish week. And the opposite is true for a bearish week. If Monday is trading just underneath a bearish price array, right? So, for example, a bearish order block. So, I'll give you guys an example. Oops. So, we trade down, and this is Monday, right? Monday's doing this. It's not really offering much. Let's say that there is and this is our bearish, let's say it's our bearish mitigation block. Now Tuesday has that news driver. We can expect Tuesday to drive above, take Monday's buy side liquidity, tap this bearish price array, form the high of the week there. Then we can expect Tuesday to move lower, Wednesday to move higher, like a retracement in the London session and move lower, and every single day will then trade lower. Now, Wednesday for us this week has the news event and it has the price array. This analogy I just used of the Monday trading, right? So let's say Monday is it's a bullish week. Monday is trading, 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 and underneath Monday is trading just above a bullish price array. Tuesday would then take Monday's low into the price array, create the low of the week there, trade higher, and form the bullish week expansion there on the Tuesday, Wednesday, Thursday. That's what's happening this week, essentially, right? There's a news event tomorrow, and we are currently trading just underneath and inside of a premium array, the fair value gap on the higher time frame weekly. So what's likely to happen? FOMC touches it, trades higher into it, and then rejects down, and then the Thursday and the Friday expand down, and then the next week is likely to carry that on. This is how you form your narrative. And the crux of this lesson is you have to know and be aware of the days of the week. This is called the weekly expansion. In this bullish week, not every single day was an up day. Wednesday was a down day. And in the weekly commentary, what do we say? That Wednesday was just rebalancing this range, right? And then Thursday made the high of the week. I want you guys to be aware of this. This is the reason why Tuesday, Wednesday, and Thursdays are the best days of trading for the intraday trader, because Friday, without the news event, because this week did have this trading day, this Friday last week didn't have a news event. And what did it do? It just traded back into the range. It's not favorable to trade. This is not favorable to trade, not many pips. But this move, and this move, those are the moves you want, right? This is called market profiling. I know I'm doing a lot of talking, forgive me for it. I know I might sound like ICT, but this is the boring stuff that we have to talk about, because this is the stuff that is going to take your trading to the next level. Being aware of the day of the week that you're in. This is time. You know how we talk about time and price? Well, this is the time aspect. This is the day of the week. Remember chapter 1 we spoke about quarter of the month, quarter of the year? Well, this is day of the week. Day of the week for their weekly expansion is so important. In the next few lessons, we're going to talk about time of day, and it's about blending it all together. To wrap things up, you have to know where you're trading on your higher time frame, premium, and discount arrays. Are you likely to trade? Are you in a discount trading into a premium? Are you in a premium are likely to trade back into equilibrium or discount? Derive your bias from that. Derive your bias for the weekly. Now, whatever your weekly bias is, you are waiting for trade setups to be in line with that weekly bias. If you're expecting a bullish week, do not take sells. Rather, take buys that are in line with your bias. You will be able to hold them for longer. They're safer as well. Now, when do you hunt those buys? Preferably the Tuesday, Wednesday, and Thursday, the weekly expansion, right? When do you expect the low of the week to be made on a bullish week? Early on in the week, preferably the Monday and the Tuesday, so that we can build the range with the rest of the days. The opposite is true for a bearish week. You expect the high to be made early on, and then the rest of the week trade down and make the weekly range. I have a very extensive backtesting exercise for you guys. essentially what I want you to do, and this is going to be long, but this is where things are learnt. You have 1 years of backtesting to do from 2021 to 2022. And I've done this and I always do this. This is how you see things. This is how you learn. This is homework. From Jan 2021 to Jan 2022. I want you guys, right? You see how I have this. So let me remove this so that it's clear. You see how I have this, right? This Monday, Tuesday, Wednesday, Thursday, Friday, this week split up. I want you to do that for every single week from Jan 21 to Jan 22, right? And I want you to make an Excel sheet and I'm going to show you an example. I want you to have your outlines at this midnight. I remember Friday closes at 5 p.m. to the New York time. And I want you to do this for every single week. And what you're going to write is, was the week bullish or bearish? So you're going to have, I'll show you how I had it in my Excel. You're going to have bullish or bearish. You're going to have bullish week, bearish week, right? What day made the high of the week, what day made the low of the week, and you're going to do that for every single week. So you're going to have bullish or bearish week, and then you'll write January bullish, high of the week made on Thursday, low of the week made on Monday, and you're going to do that for every single week. And I'm gonna have an part A, part B, part C for you to do as well. And this is going to help us become more technical and treat it like a science, because we're gonna do an experiment, which is the back testing with the observation to our observation. Our observation is that on a bullish week, we expect the low of the week to be made early and the high of the week to be made later on in the week. That's our observation. We're going to have evidence, which is the back testing, and then we're going to collate the data, see if it's in favor for observation. And I want you to guys to see how useful this is, because let me tell you something. I know some of you guys are trading in this mental ship, and not in an arrogant way, but it's better for you to be learning here than retail. I've done it. Let me tell you something. Retail doesn't even acknowledge that there is a high of the week and a low of the week. They trade with vibes. They see it's going higher or lower. They don't understand that there is a high and a low of the week. They don't understand that there's a high and a low of the day. They don't understand. They don't even comprehend or think about where is it likely to be the high of the week and the low of the week. Because listen to this. If you know where the likely low of the week to be is on the bullish week, then you know when to stop letting the buys rip off. Every retracement you're letting off a buy. This is going to build so much confidence in your systems, right? And you know what day is likely to place the high of the week. You know that using certain news events, right, you can start framing how the week is going to be formed. If Monday has the news event, it's likely to make the opposite end of the range. If Tuesday does it, it's going to make the opposite end of the range if Monday doesn't have the news event. If Monday is trading just above an array on a bullish week, then Tuesday trades down into the array, creating the low of the week inside of the array, and then go higher, right? And if you don't understand what I mean by array, then you have not studied chapter 2. You need to go back. The array is the order block, mitigation block, breaker block, fair value gap. I don't know if I missed any. Could be rejection block as well. Those are the arrays, right? Because price is gonna just move from a discount to premium, premium to discount. And that's what we're trading essentially. That is the weekly expansion. This movement, right, from here to here, is it not just a movement from Euro USD's discount to the premium on the higher time frame? That's what causes the expansion of the weekly candle. Anyway, there's been a lot of talking here. Don't worry if you guys are confused. The next videos we're gonna keep adding and adding and adding. Right? We're gonna talk about the time of day. We're gonna talk about a lot of things, right? Ask me questions if it doesn't make sense. This is going to be hard to understand. That's fine. It's not meant to be easy. But once you understand weekly profile and building an understand, because knowing the weekly bias, right, it's getting easy now. Knowing your daily bias, no, it's very easy now, right? But knowing which days are likely to be the weekly expansion and which days are just building the low of the week and the high of the week, that's gonna catch people off guard. And knowing, you know, how the weekly candle expands and forms the low and the high is gonna keep you on side. Now, enough talking from me. That's gonna be the end of the video. With this video, I'm gonna also place your homework and an example. So until next time, and if you have questions, please do ask me. Don't hesitate. A lot of times we learn through conversation, and I'm open and I have all the time to have a conversation with all of you. Just hit me up. So until next time, and I'll see you guys.